how over a period of time is your culture evolving to adapt to that digital transformation, because culture eats strategy for breakfast, and digital disruption is no different. Digital disruption is just another new name for the strategy. I will be talking about the 5 key themes or pillars that can help the banks or the fintech to build a future proof bank. And we go live. The customer experience, ethical practices, and the ecosystem and the API strategy cannot be built unless the enterprise has the 3 qualities, what I call the agility, architecture, and adaptability. So, enterprise agility, architecture, and adaptability matter a lot. There are few elements to this, because the entire execution and the operational aspect of banking is determined by the enterprise agility. How open is the bank to change their legacy models? Here, I would like to bring the analogy that just because you have made a lot of investments in the past in your legacy systems and getting some of the systems right, and just because they worked for you, does not mean that it is going to work for you in the 2020s. 2020 is such a disruptive decade. I cannot possibly exaggerate the need to reinvent the business models and to move fast. If you had planned your strategy way back in 2015 and thinking this is how we will be in 2025, I think that would be a too long a window. You need to think about your strategy after every 6 months or after a quarter, just to see how the things are moving. When I say the enterprise agility, architecture, and adaptability, I would like to bring out few points. The first is that what kind of banking technology solutions are you using? How well are you using artificial intelligence, blockchain, cloud, data science, RPAs, and other enterprise offerings to make sure that your processes are agile? Then also, how over a period of time is your culture evolving to adapt to that digital transformation? Because culture eats strategy for breakfast, and digital disruption is no different. Digital disruption is just another new name for the strategy, and if the culture is not right, the disruption is not going to happen. Build up models that are asset light, and some of the banks are playing it very smart. They are actually building up their own venture divisions wherein they are investing into the partners or building certain strategic fintech or products for the future. And that's the right approach to take for these banks, wherein you have your own ventures. Think of yourself like an incubator. Think of the investments that you are making. SoftBank, for example, is of course a bank, and it has a venture arm as well. But imagine that $20 million investment that it made in Alibaba, and the explosive returns that investment got has been a key factor for the success for SoftBank. And now Alibaba is using the same model. They invest in so many fintechs around the world to make sure that they get a share of returns that may come from one investment that turns out to be a 100x or a 1000x kind of golden investment. So have a venture incubation arm that can help you evolve like a new age technology company. I would like to make a point is that the banks need to think of themselves as the partners to the customers, and when you have an incubation or a venture arm, it becomes much easier for you to actually educate and to incubate a client or help them or provide them with all the services. I would like to give an example of Kabaj, which was acquired by American Express. While it has been acquired, and I have great respect, tremendous respect for the models of both American Express and Kabaj, it is amazing that how many solutions that Kabaj was actually creating for the SMEs that it was onboarding on its platforms. And if I were to take a non-bank example, and I think Square recently became a bank, but before it became a bank, Square is actually trying to create a seller's ecosystem, an SME ecosystem, wherein it is providing end-to-end solutions that the SMEs may need, right from invoicing solutions to hardware solutions to the point of sale terminal solutions. And it is making the life of the seller as well as the customers very easy. The customers buy the Cash App, and the sellers by providing them customized loan products, which wherein the durations are flexible. So this again feeds into the product point that I actually made earlier, that it is very important for the banks to be agile, be flexible with the architecture, and understand that how important it is to adapt. This change has to come from within. It is like reinventing the DNA for the future if the bank has to survive.